Good to see you. Thank you.
Good to see you, Richard.
We'll come to your rate and all of that in just a moment. But first of all, how much more difficult does it make it when, for instance, the Fed raises rates like it has today?
Quite a bit, actually. But first it's important for the Fed to regain its credibility. So in terms of raising rates and aggressively, that is all well. The problem is there'll be a huge outflow of capital from our countries, emerging markets and frontier markets. And that obviously complicates not only the external position, but also the fiscal position and obviously even the investment positions of our countries.
There's nothing you can do about it, really. I mean, you can ask the Fed not to do it, but they won't. You could ask the ECB, same reasons not to do it, but they'll say, well, we need to do it because getting rid of inflation is our number one priority. So in that scenario, you are between a rock and a hard place.
That is correct. It is important for them to do to work on inflation as the number one problem at this moment. But I think also they need to consider the spillovers on the emerging markets. And this, I think, the solutions for that include, for instance, a little more consideration for tightening the safety nets of the countries that we are in. And the safety nets here relate, for instance, to the IFIs, which is where we would go for capital when the capital markets are close to us. So that's one major consideration. And secondly, of course, is to help us strengthen our macro framework. So to the extent that they can provide us with bilateral lending, etc., that I think will be appreciated.
This is exactly what the World Bank was writing about, wasn't it, in its latest report when it said that we're facing potentially a global recession. In Kenya, do you now believe there'll be a recession?
Not at all. Actually, we believe that this year, last year we grew at 7.5%. And this year we expect growth to be somewhere in the order of maybe 5.5%. But I think that is on the back of already a weak global economy.
But 5.5%, yes, 5%. It's not apples and oranges in a sense. That is essentially a recession in Kenyan terms. It might not be by the NBER's terms, but that level of low growth is worrying.
I think it's still it's not a shabby level of growth. Let's begin there. Why? First, it is still positive real growth, per capita growth. So we start there. But I think also compared to other economies, it's true the global economy is supposed to grow at about 3.2%, although that will be scaled back, we expect, in the next few weeks. But I think the point here is that in a bad sort of situation, we generally would grow at 4%, maybe 3%. So I think 5% is still a good growth.
In terms of your next rate move, you're not going to tell me what you're going to do. That much I don't expect. But you're already at, what, 7.5%, inflation's at 8%. You're about to go, if you do raise rates, you'll go positive, not just on the nominal, but on the real rate as well. Would you say, as far as Kenya is concerned, that the ongoing increases in target range will be appropriate?
I guess you're right. We are between a rock and a hard place, and I think what is clear is that whatever we'll do, we'll want to do it in the context of data that is coming to us. So at this moment,
but that data includes what other central banks have done.
That is correct. That is correct. So in a sense, we would also be reacting to what has happened. So that is correct.
And in terms of using the policy rate. Yes. I mean, as the currency weakens purely on technical factors against the euro there, at what point do you become worried? Firstly, on how it's hitting your exports. Secondly, how it imports inflation for the rising level of imports.
I think more important, more immediately, is the impact on financial flows right off the bat. For instance, already we have had maybe 18% decline, strengthening of the US dollar against other currencies. So that is important. And just today after the announcement, it's strengthened by about 1.8%, just like that, you know. So I think that is providing, that is pushing quite hard, or pulling quite hard on the capital that is in our country. So that is the initial and I think most important impact. The pricing of exports and sort of strengthen, this will only happen in the sort of medium term. And I think that is held back by other considerations like supply side, production capabilities, etc. So I think in the first instance, we'll have to fight strongly against the capital inflows, the capital outflows.
Governor, very grateful. Thank you, sir. Good to see you.
Good to see you, and I look forward to you continuing to drink our Kenyan coffee.
And tea and coffee, both.
Oh, yes.
Absolutely.
Thank you.
Some of the best in the world. No, don't all start writing to me about your coffee and your tea. It's all good. I'll enjoy them all at various points.
Thank you, Richard.
As we continue, boxed in inflation pushes the price of flat pack furniture. The